What's going on, guys? We're going to cover the NASDAQ 100 chart, and on this chart we're looking at the 1 hour time frame. Now, again, today started off very choppy. To be honest, I took a couple of trades on an evaluation account, lost that evaluation account, decided not to even trade my funded accounts today. It just, for me, is not worth it. Setups that I'm looking at, were some of them there? Would they have worked? Sure. Others, didn't really do anything. Ranges are just way too big. A lot of chop, a lot of like back and forth. I hate the word chop, but a lot of consolidation, a lot of back and forth moves. Did manage to, kind of squeeze out an options trade, made a little bit of cash there, and we're gonna live to trade another day. What we're looking at here on this 1 hour chart, yet again, we are rejected at hourly supply. So each and every single day, I definitely recommend that you guys look at your hourly chart, look at your 4 hourly chart. If it looks like the market is bouncing or the market is pushing higher, just make sure that you're not running into a macro level of supply, because as you can see here, we kind of, we're pushing up a little bit in the overnight session, and then we kind of to fade off a little bit here off the open, quick spike, and then a big dump, and then followed by just almost an immediate back and forth kind of, teeter totter, right? Where at the top of the hour after New York opens, we bounced all the way up and then yet got rejected again. And what I'm looking at here is a 50 EMA, a 50 SMA, the 20 SMA, just all of this supply that is just stacked here. You can see for the better half of about 2.5 days, we're essentially consolidating, going through a period of distribution in this downward cycle. And today we started to take out the previous day's low. So now that we're below the previous day low, we're coming into Tuesday's low, and that price is sitting at about 19,200. I would expect that we get down there again. If you guys have been following my videos, you guys know already, I think that this market is not going to be done with this selling until something major happens in terms of some type of resolution with the trade wars, and also some type of word or message that we are cutting rates. And I think until we get that, you're going to see this type of action. So we're going to really have to make some adjustments on how we're going to trade this market. Definitely, I think taking less trades is going to be better. I think sizing down is going to be better. I think taking quicker take profits, even though it seems like you're going to make more money because of the ranges are so big, I would rather just make a little bit of cash and kind of lock it up. And we just, we live to trade another day, right? We come back in, we trade another day. We keep logging in those green days, and we just keep the whole ship going. So where do I think that this move is probably coming now that we have taken out yesterday's lows? I mean, we've got support all the way down here at 19,000, which is about 300 points. Now the NASDAQ is down about a 1.5% as we speak. It's currently 9:30 in the morning Pacific Standard Time on the 13th of March. So again, even if we don't get down all the way into this range, I don't expect us to drop another 300 points today, but I think we're en route. Okay, I think we're en route. And if I look at a bigger time frame, if we pull up the 4 hour chart, you're going to see that we're well below all this area of supply. Okay, so anytime you're below areas of supply, it becomes extremely difficult to kind of find these price targets for new shorts, because the move has just been ongoing, and the move's been ongoing for the better half of a month. So, you definitely want to lean into those short-sided positions a little bit more. One thing that I would definitely look at here is if on the 4 hour chart, if you were to kind of make this trend line, you can see we are putting in a little bit of a flag pattern here in this downwards move. So we've kind of broken through here on the 4 hour time frame. I do have a Bollinger Band sitting at 19,200. That's not too far of a stretch. I think we could probably get there today, if not overnight. And we're going to have to see what we do once we get down into 200. Okay. If this market wants to continue to sell off, I'll pull up the daily chart, and we're going to really zoom out, and we're going to go way back here. So we're, realistically, okay, this sell cycle started once we lost our 50 SMA on a daily time frame. Okay. That's all the way back here on February the 21st. Now, what I was hoping for, if we were going to see some type of recovery that wasn't going to last that long on the selling, was as soon as we lost this 200 SMA, maybe spend a day or even two, but then quickly try to reclaim it and consolidate in this area. That would give you a good sign and indicator that we're going to make our way back to the top side. The longer we spend under the 200-day moving average, the longer this process is going to take. Okay, and we have to go all the way back here. If we start looking at months of September, looking at months of August, we've got some prior swing lows that haven't been tested right here and here, and those prices are going to be sitting, somewhere in the 18,000, if not all the way down here towards 17,000. Ultimately, I think we kind of get down into that $17,000 range before this is all said and done. But hey, I would love for the market to prove me wrong. I definitely have a long-term portfolio that is, completely upside down as of right now, and giving away some good gains from a lot of my averages. So again, if I was to look, let me kind of take this line off. If I was to look at the weekly chart, now this uptrend has not been broken, okay, or we have not traded below this entire uptrend since the last time we tested it in 2023. Okay, and if I just continue to go back in time, the last time we really traded below this uptrend, I mean, you're talking about the beginning of the end of 2022, the beginning of 2023. We only spent about a couple of days below this, big channel here. And other than that, for the better half of 2 years, we've been holding this uptrend. Now, as dramatic as the drop sounds and as dramatic as the drop looks, it's really still in one big uptrend for the past 2 years. So what's really going to start to change things is if we finally start to close below this trend that we've held for the better half of 2 years. And if we do, you're going to see very rapid prices where I think you're going to get some capitulation from retail just absolutely throwing in the towel. They want nothing to do with the stock market. And, they're going to wait for better days, right? You're already starting to see and hear the headlines of we're going to be going into a recession. And this creates a lot of uncertainty. It creates a lot of fear. There's a lot of ongoing issues with the trade wars. There's a lot of ongoing issues with Russia and Ukraine and how that is progressing from, the communication and the standpoint of, are they going to have a ceasefire? Are they going to be able to resolve those problems or not? So with that being said, with that type of uncertainty, the market is even selling good news, right? So yesterday we had CPI, expected 2.9, came in at 2.8. Today was PPI, came in better than expectations. And the market continues to sell. Because when you start to see, anytime you start to see good earnings get sold, anytime you start to see good news get sold, it's giving you an indicator that the market internals are very, very weak and there's still a lot of uncertainty. There's not a lot of buyers that are feeling comfortable right now if potentially we're going to spend the next 6 to 12 months on a downtrend, right? Again, even though we've come off the top about 10 to 11, 10 to 12%, we are in a correction territory. It's that middle ground right now where if you go ahead and you just start dollar cost averaging in and you start buying this dip, and we spend the next 6 to 9 months continuing to sell off, it's kind of like, okay, right? Like it doesn't really make sense. So I don't really want to load the boat here. I don't really want to get involved in the market. However, you also run the risk of this market rebounding from right here where we stand, and then you miss the entire boat, and then you're stuck buying at all-time highs. So it's a little bit of a sticky situation for investors. I think for investors, it's always a good idea to dollar cost average. Again, because we've already done some, some pretty decent selling, I would look to your weekly, if not monthly charts for some of those DCA areas. Again, a DCA area would have been when we hit around 20,000. The next one would be literally where we're at right here, right now. My next wave of buying wouldn't be until we're at least in the 18,000s, low 18,000s, between 17.9 and 18.3. This would be my next target where I'm going to want to DCA in a little bit, because who knows, we might just sweep down here and start that road to recovery. And then your last DCA zone is going to be down here. This is, God forbid, just because it's going to take more time for the market to recover, but anything between 15.5 and 16.5 thousand on the NASDAQ 100 is where you're going to want to do your final loading. Now, again, if this market was to see some deeper problems where we're trading below 15,000, we'll have to have another discussion. But as of right now, again, yes, the market is pulling back. The market is a little bit weak, but is it kind of throw the baby out with the bathwater and sell the wife and kids and go into hiding? No, right? It's just, a big major correction in a market that's been, essentially red hot for the past couple of years. Very inflated of a red hot. So again, like President Donald Trump has said, the market, is going to go up and down, right? But for the better half of the previous administration, those numbers, the valuations, the way that the stock market was moving up was kind of inflated based on the internals, and the foundation wasn't really strong. So what he's trying to do is strengthen things from the bottom up and then have a natural and organic rally that is well deserved because the economy is strong. Not to pump the market like the previous administration and just keep it floating along as if everything's okay when structurally and internally things are damaged. So that's why we're taking a bit of a major blow here. A lot of the big banks and a lot of the hedge funds have cut their price targets for this year. Not much. They're still expecting a positive net return on the end of the year, but they have cut those percentages down 10 to 15%. So instead of, expecting the S&P 500 to return, anywhere between 20 and 25% year over year, we might be looking at 10 to 15%. Again, it's all dependent on what exactly happens. Now, you can wake up tomorrow and everything can be resolved and we can just be screaming towards all-time highs. I personally don't think that it's going to be tomorrow. I don't think that it's going to be this month. I think this is going to take a couple of months to kind of recover from. I would love to be wrong, again, for the sake of my long-term portfolio and my other investor friends. From a day trading standpoint, there's going to be areas of opportunity where we can definitely short these big moves on volatility. There's definitely going to be times in days where we can catch dead cat bounces, and those longs, those scalps to the long side are going to be very, very nice because we're so extended. They're going to snap back and they're going to provide a lot of opportunity. Here's where things are going to get tricky. When you start off a day like we did today, where the market is exceptionally choppy, you're going to have an opportunity to get into trades, but it's going to wick you in, pull back 20, 30 points. And if you're trading anything, putting any kind of size behind that, you're going to take a death of a million paper cuts. And you're just going to get chopped up for $500 at a time. And you're going to realize it's like, wow, it's like, I can't get a feel of the market. It's kind of how I felt this morning. Couldn't get a feel of the market. Instead of continuing to trade or continuing to force any ideas, I pulled myself out. I'll come back tomorrow. I'll still manage the chart. Nothing has really changed. We're still on this downtrend. The reason why we're kind of chopping a little bit is because we are definitely fighting with this two-year uptrend, right? So is the market going to close below it? We've already broken through it. If next week opens up, and let's say you start with a little bit of a dead cat bounce, but you fail to really reclaim any bit of, upper supply, and we start to confirm, guys, your next price target is going to be 18,000. Okay, 18,300, 18,400. It's where we're going. It's, I think personally the market's going to need to drop more than 20, 25% for us to see an immediate course of action where they're going to, drop these rates, get the money printer back on, and actually fix these problems that they're trying to fix. But again, it's just my opinion. We could definitely slingshot from here. So make sure you guys are doing your own research. Just wanted to kind of give an update on where the NASDAQ 100 is right now. If you guys enjoy this type of content, make sure to like, comment, and subscribe. It lets YouTube know that you guys enjoy the content. If you guys are futures traders and you want access to my course with all my strategies on how I pass evaluations, how I get payouts with these prop firms, you can definitely use the link down in the description box below. Also, 11 hours left, Apex 80% off sale. You guys can use code DAnthony. That's going to save you 80% there. I'll see all of you guys on the next one.